All right, today we are here with Matt Smith, and we want to talk about Tesla version 12.3 and why it's important to Tesla's financials. And the piece is about FSD take rates, full self driving take rates, which is a percentage of people that buy FSD either when they buy the car or over time, or the percentage that subscribe to the FSD package. Is that right, Matt?
Yeah, that's right. And for people who've been following this closely for the last couple of years, the thing that maybe has surprised is that take rate has actually decreased pretty significantly. So a couple of years ago, we knew that Tesla's FSD take rate was around 25% or so. Now that was back when their sales were almost entirely US only, and the product was recently introduced. And also Elon still had a lot of credibility on timelines with FSD at that time. So he was, kind of promising FSD and robotaxis, and I think that was also relatively fresh in people's minds. I think what's happened since then is that Tesla has broadened out beyond the United States, so selling a lot more in Europe and China in particular. Take rate in China is 1% right now, and in Europe we don't know the exact take rate because they don't disclose it, but the functionality is extremely neutered relative to what's available in the United States. Canada only recently got FSD beta. They still don't have 12.3, at least to my knowledge. And so, really, for the majority of vehicles that Tesla sells, you don't get access to the best product. But that is changing. So the Mr. Green, I don't know if everyone follows them, but they do a lot of great stuff. They manage a huge fleet of Tesla vehicles in Europe, and they've been tracking the regulatory advancements there as it relates to allowing FSD beta on the roads. And there was a big announcement recently that is essentially going to allow FSD beta on the streets of Europe probably by
Mhm.
Q1 of next year.
Okay.
Similar developments are going on in China, and you can just imagine. All right, let's assume nothing changes. Let's assume we still have version 11, for example, and all you do is allow the same functionality that we have here in the United States to Europe and then to China. Um,
Mhm.
Basic economics would tell you that take rate should increase proportionate with your weighted average volumes in each of those countries. So
Mhm.
you got that change coming, and then on top of that, you've got the change in functionality. And I mean, Bradford, you have experienced 12.3. I my mind was blown. Like this is a much like people don't realize, I think, what a better product this is than any of the 11 stack versions of FSD. So maybe just take a second about why that is is so important.
Yeah, 11 was okay. It can do a lot of things that other cars cannot do, period. But it's very frustrating for people to use in their local areas, especially outside of California. I wasn't using version 11 anymore in where I am in Carmel, Indiana. I did the Rebellionaire road trip. I did 12.2.1 in Carmel, and it basically aced almost the roundabouts. Out of 86 roundabouts, it did maybe two of them wrong. And one of them was a safety critical of the two, a safety critical intervention. Um, so it's greatly improved. And then on top of that, version 12.3 is even better. So the acceleration's just a little more modest than it was. And it's actually spot on right now. Um, and we're not sure what else version 12.3 improved, but uniform feedback from around the country, people in the Carolinas, New York, Alabama, etc., is that version 12.3 has fixed over 90% of their issues in general.
Yeah. And I mean, so I would use FSD pretty regularly, but I would say it was more so to kind of keep track of the progress. So I would use it on most of my trips, but like I guess I grew accustomed to just how awkward it made me feel. I mean, drifting over the center lane like constantly, and so in other words, I would use it all the time, but it wasn't really because it made my drives more relaxing or better.
Mm.
12.3, I've not had a single intervention since I got 12.3 a couple days ago, and I used to have, I don't know, two or three interventions on a or disengagements even on like a 5 minute drive. So like the reduction in disengagements is just like drastic. I'm only doing a little bit of accelerator taps, and that's really not
Mhm.
annoying to do. So yeah, it's just drastically better, and it's only going to continue to get
Yeah.
better. So when we get to modeling, we want to kind of lay this groundwork because it's not just like, um, oh, what if take rates go to 50% for some reason, and then we get
Mhm.
excited because the like number go up. Um, the analysis that we're doing in the number side has to be, kind of grounded with what's happening on the technological side. So
Mhm.
the way I think about this is, okay, this is like the first step is FSD as a really great ADAS system, and I think what advanced driver assistance system for those who aren't as
Mhm.
big of nerds as Bradford and I. And so what I'm hearing you say is that when you were using FSD, it wasn't even worth it as an ADAS system for you to use when you had already paid for it. But I'm curious, like, does that calculus change for you now? If you were a somewhat price sensitive buyer, would you be adding on FSD now, even kind of aside from your Tesla investment? Is it worth it now? Do you think for an average driver, just for the assistance that it provides?
I'd say it's very close. It is a chunk of money if you add it. So the 200 a month isn't that bad, but
Yeah.
$12,000 as a one-time cost is a pretty big nut. I wasn't using it anymore on city streets. It still was good on highways, and that's available in the basic autopilot package. Um, yeah, I think it's becoming exciting and useful again. And most people do not like driving. Farzad did a poll. I know it's not a scientific poll, but do you want to drive or do you need to drive or something like that? And most people answered, I drive because I have to. It wasn't
Mhm.
I drive because I like to or or whatever. Um, so I think most people are in the camp that they, when they're being honest with themselves, they don't really like having to drive. And if a product can take that burden off of them, that's what they're going to do.
Yeah. So with all that as the kind of qualitative background for what we're going to do, let's maybe jump into the quantitative analysis in this model. So I want to just orient everyone to the screen here. So this is just a model that has quarterly kind of delivery estimates as well as FSD purchase and subscription take rates going forward all the way through Q4 of 2027. So this is a look at the next couple of years on a quarterly basis. Couple things to point out here. One, this is, I would say, pretty conservative and maybe consistent with some people who are negative on Tesla in
Hmm.
terms of the delivery estimates in the near term and the implied earnings per share. So for this year, for example, it's only assuming 1.8 million units, so essentially flat demand. Earnings per share less than $3, so declining
Yeah.
sequentially. Now
This is
we're
not
assuming,
our base case, but this is just like a starting point for us to look at.
yeah. So a case that basically reflects a lot of the negative sentiment that is going around the stock right now, based
Mhm.
on concerns out of China and delivery volumes in general being down and margin pressure. So this kind of base case that we're going to be starting from is not, like Bradford said, our base case, but it is really just to kind of orient on where. Uh, you might say the stock is fairly valued or slightly overvalued based on the numbers that are in here, but we want to show how meaningful changes to take rate can be. Um, one other note on this is that the subscription take rate, it's not just 2% of the 421,000 deliveries based in the quarter. I have a model that's built up based on the entire fleet of Teslas because anyone right now who's bought a Tesla since Hardware 3 came out several years ago can opt to subscribe. They can opt to purchase too, but we suspect most people will subscribe. So this take rate is essentially the global take rate on subscriptions on the entire fleet of vehicles. And at a 2% take rate right now, it's extremely small impact on the overall financial performance of the company. So we think that's probably a reasonable estimate with how many drivers are subscribing to FSD at the moment. Um, So then I've just got this on a chart over here. So the left axis is take rate for purchases and for subscriptions, and then the earnings per share increase over time is almost entirely attributable to increases in deliveries. I do have some basic assumptions that are not really that relevant for this video on energy growing and margins on services and things like that. But for the most part, that those are fairly benign kind of assumptions. So we won't go into those. We really just want to show how changes in take rate can change the financials of the company. So first thing to notice here is that the blue line of the purchase take rate and the orange line of the subscription take rate are flat, which for the reasons that we laid out at the beginning of this video, I don't think make any sense. So these are our best estimates of where the numbers are right now. But as more geographies get access to FSD beta and the functionality improves, I think it stands to reason that take rate should be increasing. So you can do a couple different things here, but maybe just to start, you can look at like the take rate increasing. Whoop, I already screwed it up. You can look at the take rate increasing like 1% a quarter or something like that. Oh my
Y-
gosh.
You're not
Don't.
putting a plus in there.
Um, so if the outright purchase increases all the way up to 22% by 2027, then
Mhm.
all of a sudden you're getting a much more meaningful impact in earnings per share. And then I think it also stands to reason that your take rates, your subscription take rates, probably going to increase even more. But just because you're doing this on the global fleet of vehicles, let's say it increases by 0.5% a quarter, so then you're at 2027 earnings per share of $7 as opposed to the base case, which was around 527. So almost $2 of incremental earnings per share, and probably more importantly, you're getting compounding uh, earnings growth. So the thing with the subscriptions revenue in particular is that these are cumulative. So you're going to get more and more subscribers into perpetuity. So you would apply a higher earnings multiple on subscriptions revenue than you would with the purchases revenue, because that's going to be highly dependent on your overall deliveries.
Mhm.
Um, so this is probably a reasonable scenario, I think. I mean, if you look at it, the implication, it's like around a 30% take rate, little bit higher than that on the overall fleet. And to me, this makes reasonable sense just as the technology continues to improve. I mean, Elon's talking about major improvements every 2 weeks right now, and I think this time there's actually reason to believe that. So we should have Smart Summon actually coming very soon, and then
Mhm.
Vanish, which is a great name. And so that
I
that's just like
banish thee to the netherworld.
I banished the shorts to the netherworld. Um,
Yeah,
so
something has happened with Tesla's compute. So, yeah, after I gave James Dalma the ride, James was talking about how he was speculating that Tesla's training compute was limited, and Elon agreed with him. This was on March 5th. And just last night, in a response to Robert Scoble, Elon said that Tesla was no longer training compute constrained. Um, so something's happened in between. Some kind of switch got flipped on. We don't know what it is, um, but something's changed, and they're talking about releasing major updates every couple weeks, even if it doesn't happen at quite that fast. It may be every month. It's still pretty exciting that the team believes that they're going to be able to do that. That they have the compute in place, they have the right process, the right people, and the ability to get more data if they need to get different data, and they can sit there and ask the fleet for more data on specific edge cases or whatever they want to train on. So the level of confidence tells us that they have something pretty special here, and it's going to get them quite far in being able to develop their autonomous solution.
yeah, and I think what's different this time is Elon has always said the right thing, but this time we're actually seeing it delivered. I mean, I had a tweet from over 2 years ago that I posted basically just saying how horrible FSD was. So we've always tried to be transparent and honest about the current state of FSD, and we are legitimately excited based on how good it is right now.
Mhm.
Long way to go from being a robo taxi, but you can see here like the increase in earnings power over this time is pretty significant, even with I would what I would say is relatively modest assumptions around take rate increasing, just given the increased functionality.
Mhm.
But maybe we can look at a couple different scenarios.
I'll say one more thing.
Sure.
Matt and I are one thing, but my spouse refused to drive version 11, would complain every time I want to try it with her in the car. And it's so good that she sees herself using it on a daily basis. Um, with my drives now to and from work, taking my girls to school and then going to work after that, etc. Most drives are flawless, and a lot of the roundabouts it drives better than I do. So it chooses a better line, it chooses a better speed. It's just much smoother. So this is the real deal. Go ahead, Matt.
Yeah. Sure. So, I mean, let's just maybe try a couple different scenarios here. So, this is, reasonably middle of the road scenario, I think. But another scenario is just that in by 2027 in particular, um, I think it's reasonable to assume with Gen 3 being launched at that time, you might have a serious number of subscriptions. To me, I think autonomy actually could be solved within that time frame. Do you think that's possible where you actually have robo taxis by 2027?
Yeah, I'd say so. I'd say that's possible for sure.
All right. So one last scenario we can kind of run through here, and this is going to be just a kind of quick modeling sheet as a way to force a future where let's imagine some point in the distant future when there's a fleet of 100 million Teslas on the road. So I'm just going to force that in right here. Um, Kind of ignore this figure for now because that would be the earnings power of selling that 100 million vehicles. But then if you
Mhm.
get to the point where the entire fleet,
You
not a
need to put
thousand
a
percent, that
hundred.
won't work.
You put 1,000%. There
I
we
know.
go.
Yeah. So if you assume that the essentially the entire fleet of Teslas at that point, and at that point you'd be selling, I guess the long term goal is 20 million a year, so you'd be selling 5 million a quarter. Um,
Mhm.
So if you have 20% outright purchase price on a quarterly basis, and then maybe we call it, I don't know, 90% of the existing fleet of vehicles opts to subscribe. So you've only got a minority who aren't subscribing. Then at that point, which is maybe 2030s at this point, so ignore these labels in this last kind of hypothetical. Then you're earning essentially $20 per quarter in margin, and the majority of that's going to be on subscriptions.
Mhm.
So this points to a long-term future, and again, this is like the real number would actually probably be higher than this because Tesla would be charging more than 200 a month. It might be 200 a month plus a platform fee or something like that.
Mhm.
But it's very easy to see a world where there's annualized earnings per share of the call it 80 to low hundreds per year, and the multiple on that would just be wild. So this is where we think a lot of the super upside could be. So maybe summarizing the whole thing, we think there's lots of earnings power just in like reasonable ADAS in the next couple of years, increasing geographies, higher take rates within those geographies. And then as it becomes clear that autonomy is a real possibility where you've got earnings power of, let's just call it $100 per year, um, the share price implications for that are just wild. So this is why we think 12.3 is such a big deal and financially so very meaningful.
So we are financial advisors. This is not financial advice. He's Matt Smith. He's the numbers and brains of this operation. I'm Bradford Ferguson. We're both with Rebellionaire.com. It's been good to share this with you. Yeah, it's interesting to look at that. We're not including revenue per mile. We're not including what Tesla might charge for insurance or platform fee. Um, So it's just one way to look at it, and what that is showing is like a $80 a share or more per year in earnings, and right now the stock is 170 a share. You need to discount that potential back to the present, so you would need to divide by two even after you establish your whatever multiple you're willing to pay. But still, like it's substantial. And so when we look at Tesla, when we think about it, we're not assigning zero value to autonomy. It's hard to model in a scenario like this because it's never happened before. And that makes Wall Street very anxious about trying to put a price on it. Anything else before we go, Matt?
Yeah, I mean that's just I think you hit the nail on the head. I mean, what we know Wall Street is anxious about is the next quarter, the margins, deliveries, that sort of thing.
Mhm.
And we're not denying those are important, but we're saying you shouldn't ascribe zero importance to autonomy. And just because it's never happened before doesn't mean that it's not going to happen. So uh, I haven't been more bullish in a long time. Of course, there still are risks. Tesla's development could pause or it could never reach full robo taxi capabilities, could take way longer than we're thinking. Maybe for whatever reason, the ADAS take rates don't live up to the levels that we modeled here. So this is certainly not a given, but boy, I'm excited. And I'm just loving driving it. To be honest with you.
Awesome. And if you missed it, you need to check out our Lemonade video. Matt modeled out the financials for Nvidia. I mean, for Lemonade, for the future. Looking at how their business is going to evolve over the next couple of years and beyond. So check that out. It's a pretty big video for Matt. A lot of effort went into that. Well, we'll wrap it up there. I'm going to say bye for now.
Bye for now.